Ladies and gentlemen, welcome back to Pandrea Finance. My name is Pandrea, and in today's video, we are going to talk about how to build that perfect stock portfolio. Now, whether you're a beginner just starting out or more experienced in the market, I want to take you through some of the techniques that the pros use to pick stocks, build a portfolio, and make some money. This video will be broken up into 3 sections. First, before anything, we have to answer a few questions about what type of portfolio we want to build. Then we'll lay out a step-by-step plan to finding, researching, and picking the right stocks. And once we learn that, we can take everything, put it together, and create that perfect stock portfolio. Now, at the end of this video, I'm going to show you my own breakdown of a portfolio and percentages, which I have had luck with in the past, so watch until the end for that. Hit the like button if you want to begin. Can't start without it, so you didn't do it. All right, let's get into it. The first thing that you have to do is answer some basic but important questions about your investing philosophy. Now, everybody is different, so the answer to these questions will determine how to customize your portfolio and how you will pick your stocks. Now, the hard part about making a video like this is that I can't speak to everybody individually. I have to speak in general while still trying to give you as much detailed info as possible. What will work for some will not work for others. So please answer these questions for yourself before going ahead and picking any stocks, because it will serve as a benchmark for the decisions that you will then make. The first question is, what is your goal in this investment portfolio and what is your time frame? Really ask yourself that and be honest. See, I ask people this, and on the outside, it's very easy to say, oh, well, I want to steadily grow my wealth while being risk averse. Well, because that's what they think that they should be saying, right? Is that the right answer? Did I get it right? But when they put into practice what they should be doing, they just never stick with it. But that's okay, because as long as you know what you want to get out of your investments, then there's no wrong answer. The second question you got to answer is, what type of portfolio do you want to build? See, once you answer that first question of what your goal is, then you can start to build that portfolio that will match your goal. So you probably ask yourself, hey Alex, what type of investment portfolios are there? Great question. So typically portfolios could fall under a few categories. High growth portfolio. In this portfolio, you are looking for stocks with, well, high growth. Thank you. I'll be here all week. High growth portfolios should focus on stocks that have a higher potential growth than the overall market. We'll look for stocks in growing and emerging industries, and typically these will include smaller companies with a lower market cap, so they could have room to grow and flourish into the big trillion-dollar companies we all know and love. Value portfolios, the Warren Buffett approach. Find companies that are trading less than their intrinsic value or book value. Now, typically these stocks will have a steadier growth curve, but are usually more of a safer investments than your growth stocks. Income-based portfolio. Now, in this portfolio, you are going to focus on income-paying investments like dividend stocks, real estate investment trusts, bonds and treasury notes, or it could be filled with certain stocks that are great for selling covered calls. Now, this portfolio is more of a defensive approach, keeping your capital safe while generating that nice, juicy passive income. Speculative portfolio. GameStop, AMC, the meme stocks of the world, penny stocks, young pharmaceuticals, SPACs nowadays. All of these can be considered speculative because it can literally go either way. But sometimes these are the risks that we're willing to take to make those high returns. Now, with these stocks, you don't have much to go on but social hype and the excitement of a little gambling. Oh, baby. And many have made a lot of money using this type of approach. And last but not least, hybrid, which is a hybrid mix of all of these. Now, the info on this video is going to be based off of a mix of these ideas and approaches, and it's going to be up to you to kind of customize it along the way based off of your goals and what type of portfolio you ultimately want to create. If you want to mix, that's great. If you want to take all your money and throw it into AMC calls, that's great too. That's not great. I will support you with whatever you choose. I will not support you. I will support you. The last question that you have to answer before we can jump into building our portfolio is simply, do you think you can beat the market? It's an honest question, and I think it deserves an honest answer. See, most people can't. And the reason most people can't is because they're not disciplined, they don't do the proper research, and they have this short-term thinking that can't seem to escape them for some reason. Simply put, they are lazy. But not you though, right? So if that is you, then it's okay. Not everybody is meant to be cut out to pick stocks and build a portfolio and manage them and research. Your best bet will probably just be to buy the S&P 500 index and constantly buy it over time, come back in 30 years and then see how you've done. So I ask again, do you have that drive and motivation to want to beat the market? Everybody should be screaming, yes, I can hear you through my screen. I believe in you guys, come on. My honest opinion is that I think that you can. See, I think that individual investors have an edge over maybe bigger institutions and hedge funds to beat the market. And there's a lot of factors why. How much capital you have to invest, being more risky at a younger age. And I think just the fact that you're watching this video now, wanting to learn and better yourself, tells a lot about the kind of success that I think you are going to have. So with that said, let's jump into how to build that portfolio. Now the question is, how many stocks should you own in that portfolio? Now, even though there is no perfect answer to this, experts would say that you want maybe 20 to 30 stocks to have a nice diversified portfolio. But after doing a lot of research and testing things out, I felt like a better number represented me. 10. That's it, 10 stocks in your portfolio. This is my recommendation. Of course, it's not investment advice of what you should do. I'm just saying what I'm doing. I usually create portfolios that have 10 stocks in them. 10 stocks, in my opinion, will be enough to get a bit of everything. But at the same time, not be overwhelmed by the research and trying to keep up to date with each of these companies. But again, this is something that you will decide for yourself. Maybe you start with 10 and you're like, you know what? I'm gonna put in a few more. Hey, look, whatever turns you on. If you start with 20 and you say, I think I'm gonna reduce it, Alex was right, then, well, there you go. Now it is list making time. Get out that handy dandy notebook and we are going to create 3 lists. For the first list, you are going to write down all the big companies that you can think of. These are the companies that are not going anywhere anytime soon. The Apples, the Amazons, the Alphabets. These are companies that already have a huge market cap and are ingrained into our daily lives. An easy way to think of it is, what are the companies that this world cannot live without? I mean, we could live without it, but I mean, some people can't. So maybe go off of that. For the second list, you're going to write down all other companies. Again, this is just from our head. We're not going to research anything at this point. Again, look around in your daily life of the products and services that you use. Banks, airlines, online shops and retailers, Starbucks, cruise ships, car companies. You get it. Now you'll notice that there'll be a difference between the companies in the second list compared to the first one. There are a lot of airlines out there. There are a lot of banks. There are a lot of online shops and retailers. But there's only one Apple, right? There's only one Google. So now you kind of get the point of how to distinguish these big companies from maybe more mid-sized companies. So make a list of those companies, and then we'll move on to the third list. For the third list, I want you to write down companies that you think can 10x in value. Doesn't matter if you're right or wrong, just get them down on paper. Now I'm talking about long shots here, very small companies, new companies that could potentially become mid-sized or large cap stocks. Now this is obviously going to be the most difficult of the 3 lists because maybe you wouldn't even know where to start. Maybe you don't even know some of these companies that are out there if you don't study the markets regularly, right? And that's okay. My suggestion for this is that you can start doing a little bit of investigating. You can start looking up companies with small market cap, maybe in the few billions. Can't believe I'm saying that a few billions is considered small nowadays. But these companies should be companies with new technologies and up-and-coming industries, or that bring to market a competitive edge that nobody else has. A perfect example of this, in my opinion, is Virgin Galactic. It's a new and small company that are trying to innovate and succeed in an emerging space travel. Do they have the potential to grow and 10x? I think yeah. Will they do so? I don't know. That's going to depend on different factors. And this is where the next step of building your portfolio comes in. Peter Lynch, a famous analyst and investor, bought over 100 stocks that have increased more than 10x during his career. His fund, the Magellan Fund, averaged a 29.2 annual return, more than doubling the S&P 500 returns, which makes his fund one of the best, if not the best performing funds in the world. And how did he do it? Well, he analyzed and researched his stocks exactly how we're going to do to pick stocks. You cannot make money just randomly buying stocks and hoping they will go up. You really need to know how to research and value these stocks and then decide if they are a good buy and if you should add them to your portfolio. Now, in future videos, I'm going to go more in depth on how to value companies if that's something that you want to see, how to research them fully and find undervalued companies. But for now, here's a quick overview of things that you should look for. The first thing you'll need to look at is the balance sheet of a company. Now, I know you don't want to do it, but you got to do it. The balance sheet is going to provide you with an overview of the company's financials, their assets and liabilities. Now, assets and liabilities simply means what they own, like cash and things like that, versus what they owe, like their short-term debt, long-term debt. Now, obviously, for a company to be healthy, you need the assets to be greater than the liabilities, what they have, to be worth more than what they owe. That seems pretty straightforward. We all learned this by reading Rich Dad Poor Dad when we were 13 years old, right? No, just me? But let's take it one step further. You want to make sure by looking at the balance sheet that a company has enough current assets to be able to pay off their current liabilities. Basically what this means is, can the company generate enough cash or cash equivalent to pay off their short-term debt within the course of 1 year? To answer that, you simply take the total current assets and divide it by the total current liabilities. If the current assets are higher than the current liabilities, then you will get an answer above 1. This is good because this means that the company can pay off their short-term debt. If you do a little calculation and it comes out below 1, as in the current liabilities exceed the current assets, then you might not think that the company is in the best shape that they can be. The income statement of a company focuses on the revenues, the expenses, and their net profit, basically what they keep at the end of the day. Obviously, you want to take a look at this income statement to determine if the company is making profit, but looking at that one statement might not give you the full picture. Since companies need to report their income statement quarterly, you want to compare those current numbers to that of the past to determine if revenue is increasing. If revenue is increasing quarter by quarter, year by year, and the expenses are staying the same or best case scenario decreasing, then the more profitable the company will be. Next is the cash flow statement. Now, cash is one of the most important aspects of a healthy company. Trust me, I know, my business is over 10 years old, and one of the most important things I learned is you gotta have cash to be able to grow and expand. When you don't have cash, it'll be very hard for any company to get to that next level. You might start taking on more debt, and this will just snowball into a downward spiral of turning tricks on the corner just to make payroll. Now, a company's cash is broken up into 3 sections: operating, investing, and financing. And each of these sections have cash inflows and outflows. Basically, money comes in, money goes out. Money comes in, money goes out. Money goes in. If you have more money coming in than you have going out, then you have a net positive cash amount. Now, when all is said and done and the company uses their cash to pay off all their obligations, then they will be left with something called the free cash flow. This is the cash that a company has that is free from any payouts. Now, what a lot of investors will look at is for this free cash flow to be increasing year after year. If you see this number increase from the previous years, then that's a good sign. If the free cash flow is negative, well, it's pretty self-explanatory. Now, after looking at these 3 statements, you'll have a pretty good idea of how the company is doing. Trust me, it'll open up your eyes in how you look at the business of the company, and you'll see the company in a whole different light. It's kind of like being on the inside, sitting at that boardroom table. Yes, I'm going to need the balance sheet, income statement, and cash flow, please. But of course, just looking at these 3 statements is not going to be enough to fully make a decision of whether you want to buy the stock or not. Some of the other factors that I think you should consider are things like the brand recognition of a company, who is in charge of that company, who the CEO is, and what visions does that company have for their future. Once you put all of these factors together, you'll be that much closer to building your perfect portfolio. Now it is time to take everything that we learned in this video and put it all together. How do we actually now take our stocks and build that portfolio? Well, we have our list, we have our research tools. The rest is going to be pretty much up to you. What I would do is go through my lists and research as many of those stocks as possible. Make sure you understand the companies in your list, and more importantly, understand how they make money. You should be able to pitch these companies to somebody else and know the ins and outs of their operations. Look at those statements, determine good companies from bad companies, start crossing them off your list, and you'll notice that you'll be left with fewer companies, the good companies, or at least let's hope so. Now you've narrowed your lists down, I would take a step back and really evaluate the future of each company. What does the future hold? Look out 20, 50, 100 years and try to predict what kind of companies are going to be out there. And remember one thing, a good story always wins. Now, after doing all of this, we've narrowed it down to just a handful of stocks. We can then take those stocks and allocate them to our portfolio. 30% of your capital will go into those huge companies, those large cap stocks that are not going anywhere anytime soon. Now, even though these companies might be hundreds of billions of dollars or trillions of dollars, they can still have room to grow. And a lot of the times, these big companies are even considered growth stocks. Go figure. But I mean, it's true. When Apple hit $1 trillion market cap, how long did it take them to double that 1 trillion to become a $2 trillion market cap? Keep that in mind when you think to yourself, oh, it can't go any higher. 40% of your capital will go into those mid-sized companies or those value companies. Looking at those statements and doing research on the company, you might find ones that you feel are undervalued. You buy them, you stick them in your portfolio, you're good to go. 20% I would put into the mega growth potential stocks. Those 10x stocks that we all dream of. The ones that have high beta, high volatility, low market cap, and the potential in their future to possibly 10x. Now, if one of these companies in your portfolio 10x's, then essentially you will double the value of your whole portfolio with these asymmetric returns. Now, the last 10%, what do we do with it? Well, for me, I would put it in crypto. You heard that right. Cryptocurrency, Bitcoin, Ethereum. Though there is no reason not to at this point. Bitcoin, whether you believe in its future or not, is the best performing asset of the last decade. Do you think it'll stop performing anytime soon? So we could talk about the stock market and stocks all day long, but if our goal is to invest and make money, then we should go where the money is. I would take 10% of my capital and put it into Bitcoin or Ethereum. That's it. Here you can see a breakdown of a sample portfolio that we put together for this video. You can see it's broken up 30, 40, 20, and 10%. And you can start right now by getting up to $250 worth of crypto using my BlockFi link in the description below if you'd be so kind. Or if you're like, crypto, don't worry, I got you. You can get up to 2 free stocks using my Webull link down below too. What do you know? Look at that. Free money. Question of the day. If you could buy one stock right now, what would it be? Leave your answer down below in the comments because we are building a community here on this channel and I really want to get the conversation going. I do read all the comments and I try to answer as many as possible. Now, if leaving a comment is not your thing, then fine, I don't care, whatever. And at least you can watch my other videos on investing and option trading. You can click here and here for those. You can click somewhere down there to subscribe to this channel. I appreciate the support and we will see you on the next video.